I'm very happy to say we've seen a little bit of an influx in younger investors putting money actually into savings and investing than previously, and I think a lot of this is due to applications that have come out lately that have made it easier for people to get involved. And today I'd like to talk about a couple of those. Now, these are going to be different applications and sites that I have personally used, and some that I do currently use as well. So these are ones that got me started on investing, which is fantastic at a young age, which is good. That's what you always want to do. You want to get investing as early as possible. The first one here is going to be listed. Stock I've talked about, application I've talked about previously, which is Robinhood. By far one of the simplest ways for younger people to get investing. If you do not have a Robinhood account, I suggest you get one, just for the simple fact of that it is entirely free. That's Robinhood's benefit here. So it's obviously not going to cost you to start an account with Robinhood, and they don't charge commission fees, and that's kind of their claim to fame. Normal brokers are going to charge you for every sale or purchase you make of any stock. Now, Robinhood, they decided to go against that by, instead of doing that now, they are doing free commissions, so you don't pay for your investments. You don't pay to make a sale or a purchase. And that's been very key in getting some of these younger investors involved, because you can trade several times. You can make several purchases within a day and not all at the same time. And it's a lot easier. You don't have to buy bulk shares. That's kind of the difficulty sometimes is people, younger people having the capital to actually make investments. You think of some of these companies, like Google. I mean, does anyone have $2,000 just lying around that they're able to just invest in one stock? And that's something that I would say abnormal is for, I would say, more mature investors, let's say, people using Merrill Lynch, Schwab. They're not going to buy one share of a single company in their purchase because it pay commission fees. What they're going to do is buy everything in bulk when they buy it. So they're going to buy a boatload of boatload of shares from a company and do it that way. Now with Robinhood, it lets you get into really just start with whatever amount of money you want, and you don't have to worry about paying on that money. I suggest obviously choosing good companies starting off, obviously, but Robinhood gives you the freedom to go invest in any stock you could imagine. Even international, there's some international stocks supported there. Mostly it's absolutely everything on the New York Stock Exchange. Any of that is available. Some are not supported. Some international stocks are not supported here, but overall, I think Robinhood is a fantastic platform, and if you do not have a Robinhood account, you should. It doesn't have any minimum deposits. You just go ahead and start with as much money or as little money as you please, and really invest the way you want. The main part here with Robinhood is you're going to make sure to do your own research. You need to research a stock before you purchase it. And Robinhood it does provide you with some news articles whenever you're on a stock, as well as buy and sell ratings now, which I believe are fantastic. Fantastic addition that didn't used to exist. And you want to look at history of the company as well. It's got important statistics there when you're looking at a stock. So I think overall Robinhood's fantastic. Everyone should own a Robinhood account, whether it just be to have it just to look at it and do some more research. I think it's a fantastic thing to have, especially anyone starting out should start on Robinhood at some point. So they also offer their upgraded version, Robinhood Gold, which I do not have much experience with, besides the fact that Robinhood Gold, originally it lets you trade in extended market hours, so hour after the market closes, an hour before, so you could trade in pre-market and post-market. Now they've opened that up to every single user, which I personally love. I've never really used it because I don't tend to make that many and that frequent of trades, so I don't really day trade like that where I'll need to buy or sell pre-market or post-market. So I normally stick to normal market hours, but it is a benefit that is available, and that should be noted. Robinhood Gold also lets you borrow money to invest. It's a percentage based off what you have invested. You can have Robinhood lend you that money, and you can invest it as well to increase your buying power. Obviously, this is going to be investing on margin because it's money you don't own. I highly suggest against it. If you have surefire strategy and you know what you're doing, I could see it, but it's too much to play around with when you're starting to invest with money you don't have. I wouldn't mess with that. It's truly gambling in the end, and that can get you in a lot of debt. So overall, I'd say the gold is a benefit. There are several benefits to the gold platform for Robinhood, but I personally would say just starting out, just stick to the normal free to use system. Gold is something you can do research on, and if it's something that you think interests you, you can certainly try. Next, I would like to really quickly go on to another app which I find quite useful, which is Stash. Up here I have the different account types for Stash. So Stash is not a free to use platform. Overall, your base is going to be $1 a month. By no means a significant amount of money. Not at all. So they also offer a $3 a month platform, the growth platform as they want to call it. This includes a retirement account that you can start with them. So it's $1 for the normal one and technically $2 for that retirement account, so total $3 a month. Which personally, it's entirely up to you if that's something that you think it will be beneficial for you. On top of that, they also have the Stash Plus, which is a newer one for them, and the main benefits that they're touting here are that it lets you have investment accounts for your children, so up to 2 kids. Obviously, this is beneficial. It can get your children started off on the right foot. Obviously, investing as early and as often as possible is fantastic. And you can get your kids started early. It's something definitely to look at because you could really set them up for the future if you buy a company like Facebook for them. If you buy them a couple shares of Facebook when they're young, they could definitely have doubled their money by the time they're actually old enough to start having their own accounts. So obviously there are some benefits there to think about with that Plus membership, $9 a month. I currently have never had experience with Stash Plus. It's a newer one. They never had it during my time with Stash. Stash is an app I currently use as well, so but I'm simply on the beginner platform. I haven't necessarily found a need for the retirement account because I do have my own personal one already, so I don't really need it on this platform as well. Other benefits, Stash also offers a debit account, which will be, they would send you a debit card and you would have money put into this account and you can make purchases from it. Their main benefit to it would be their stock back program, as highlighted here. So their stock back program pretty much earns you a percentage of what you pay at specific companies. A certain percentage of that will be put towards the purchase of stocks, and the percentage is usually dependent on company. They have a list of those companies and what percentage they will pay you back with, and this gets directly deposited right into a stock purchase. Because Stash does a very beneficial thing for a lot of people, I would say especially young investors, which is they allow you to buy fractional shares. Whereas Robinhood, you have to buy whole shares. In Stash, you can invest dollar amount. You don't need to buy certain amounts of shares. You can just invest a certain dollar amount. So if you want to invest in a company like Google and you don't have $2,000, you can just buy $20 of Google if you really want to. You can put $20 in. Obviously, it's 1/100th of a share, so you can't see. You won't necessarily expect to see a significant, huge gain on your money, but it still moves up and down as the normal stock does. So, obviously, percentage-wise, you're earning a significant percentage less than the normal stock, as far as like dollar amount is concerned. But it's all about what you want to put in, and I think that's the main benefit here. And that's why I use Stash. I put in money weekly, and continually put that money in and keep buying investments. And they offer quite a wide range of investments, which I'll go into. So this, obviously they have that stock back program, fantastic. And the Plus also offers you monthly market insights. So they always have the ability to do an adjustment here, gives you growth potential. So if you look at how many dollars a week you enter, they have this just for calculations. So let's say you start now and you're putting in $50 a week into Stash, and an average gain per year of 5%, let's say. In 30 years, you will have deposited $78,000, and overall your account value should be somewhere around $172,000 if you get 5% per year on it. And you see from there, it's obviously an exponential growth. The more money you have, that percentage increases it a lot more. So I pretty much will just launch from there, which is something really exciting. So obviously this is why you want to get started investing early, in my suggestion. So that way, if you just want to put $50 a week, and 5% a year, in 48 years, guess what? You got $500,000, and that's just $50 a week, which is not a significant amount as far as putting money away is. $100 a paycheck for some people. If you get paid every 2 weeks, you can find time to get, work around without having $100 for sure. And it can certainly be worth it, as you see, because if you do it for 48 years, you got $500,000. So 50 years, you've made $500,000, turned probably $126,000 into $500,000. So that's fantastic. So just something to think about there. Is their growth calculator. Obviously, they offer banking, personal investment, retirement, and you're able to invest on behalf of children. So they don't have access to every single stock out there, and they've been very steadily adding more and more. They started off with a selection of mostly ETFs, exchange traded funds, which are a collection of stocks. They started off with mainly those, and just a few companies. Originally, they didn't have any companies you could invest in. It was simply just those ETFs which were available. So their goal was to streamline it and only offer people what they thought could be the best options for them. Now they've invested it more to like the normal investor who might want to invest in stocks. So we've got a wide range. It used to not be anywhere near this. I swear when they initially started this, they had maybe 20 companies on this list. Now they have maybe 20 companies that start with A on here. Probably more than that, honestly. There are so many companies here, as you can see. Obviously not every company that exists, but they're trying to add just the big companies, the hard hitters, of what they think people really want to invest in. So they're not going to throw penny stocks on here. They're going to throw companies that are hot right now that people are going to want to invest in. So obviously they just recently added weed stocks. I'm not messing with that, but they did. So if that's something you're interested in investing in, you could have any investment strategy here as well. So it's entirely up to you, whatever you'd like to do. They also offer ETFs with a wide variety of them. So these are just a collection of stocks. They label them specific ways depending on what they're more suited to. They're categorized. So if you click on one, so let's go to Data Defenders, it'll go ahead and tell you what exactly is making up the majority of that, the top holdings. So you can see 6% for Okta, Incorporated, 6% Splunk, 5.79% Raytheon, Palo Alto is there, and Cisco is there as well. So, and it'll link you to a two different pages based off of that, so you can see performance. So that's always exciting. Definitely something you want to look at. So you can invest with as little as $5. $5 is your minimum investment here, so something to look at. They'll also give you your risk level, and if you visit any disclosures, it'll include dividend rates, dividend percentage, as well as your expense ratio. So that's one thing with the ETFs. Mostly you're going to have to pay an expense ratio because someone is managing those funds. They're choosing what stocks to keep in there. So you're paying that manager management fees because they're running that collection of stocks. So always something to look at for ETFs is that management fee, because you don't want anything too steep, because that could certainly hurt in the end. The one issue I see personally with Stash would be that limit of that $1 a month. So starting off, obviously $1 a month certainly can hit you hard if you have $50 in your portfolio. I mean, think about that. That means if you're making $5 a month only, you're going to somehow need to earn 2% in gains per month in order to actually make that viable. So, 20%. 20% gained in order to actually earn $2 there. I don't know where I got my math from. I apologize. But, yeah. I don't know. My math is just off today. It's been a long day. But regardless, you'll feel that $1 a lot more the less money you have in, because it's going to be harder to earn money on that account. But once you have an account built up with a lot of money in, those gains are going to be easier to find. And on top of them being easier to find, you'll earn money in dividends as well. If you have ETFs or stocks that pay dividends, you might be able to earn enough on a $1,000 account. You'll definitely be able to earn enough to cover that $1 a month fee just on dividends if you're investing in stocks. So think about it. If you think about it, if your portfolio's earning, let's just say 1%, which is a very minimal amount for dividends as far as they're concerned. If you're earning a 1% dividend on your portfolio, that'll be $10 a year off of a $1,000 account. Obviously not significant, but I don't think it's an issue though. So $1,000 account, 1%, which is a small amount. Normally, I'd say most people should be averaging somewhere from 2 to 3%, but that'll be $10 a year. So really, you're only paying $2 if you have a 1% dividend rate there. If you're excluding any sort of gained money, you're going to be losing technically $2 a year only. So you're going to be making most of that money back just off dividends, and that's not even including any money gained. So that's why I like Stash. I think it's good, very good. Next one I'll go over pretty briefly. One I used previously, I don't currently use. Acorns. So Acorns was a very hyped up app a couple of years ago, in my opinion, which is when I got started with it. They make it beneficial for students for sure. So they want, if you have your student email, you can sign up for Acorns and not have to pay their monthly fee. Again, they offer a $1, a $2, and a $3 membership, which offer different things from retirement accounts and onward. So your Acorns core account is just going to be your normal $1 a month investment account. So not a huge deal. Acorns is good because it's an auto investor, so you don't pick any stocks or ETFs. You just simply pick a portfolio, which we'll go into. We'll go down here a little bit. So it's going to be right here they have a different selection of portfolios, which you get to select whenever you decide to put that money in. You can have a conservative portfolio, which are going to have a lot of bonds, because bonds obviously not going to have much up or down movement, but you'll just get paid dividend out, so they're not moving up and down in value, but you do have the benefit of the dividends there. Moderately conservative still has some bonds in there, but it also includes a percentage of stocks, which you can look at. So that's exciting. A moderate one, which has a wider percentage of stocks, as you can see. Still some bonds in there. Moderately aggressive, definitely a lot more in terms of stocks. And aggressive, which has the most amount of stocks, as well as it's just entirely all stocks. So there's a couple different selections: emerging market, real estate, and it'll pretty much divide these into these equal percentages. So that is what I think makes it exciting there. So it's entirely auto invested, so you don't have to worry about choosing anything. They pretty much choose what they think is best for you. You choose your category of how you'd like to invest, and they'll go ahead and make it happen. So I think that's an exciting thing to look at. Obviously, $1 a month based off of your account fee. So obviously, same thing with Stash. You'll want to have a little bit more money in there in order to make up for that $1 fee, obviously. So it depends. You're going to put as much money as you can. You can do recurring investments, so you don't even have to touch it, where it'll just auto pull from your funding source, which is fantastic. So you just get to leave it there and have it go ahead and do everything. So I'm going to go ahead and go into this and go into the different types of accounts. Obviously, your core, which is your dollar, automated investing, smart portfolios. It'll show you Grow Magazine, which is their published magazine. They can send via email. Found Money is going to be kind of like StockBack, as previously stated. They'll go ahead and put money in your account for very certain. I don't know exactly how many they're offering right now. It says 200 plus, but when I was using Acorns, there certainly weren't that many in this Found Money category. It'll be like 2% money back on a purchase will we put back into your account so you can invest it. It all depends on what, obviously, card you pay with, because that's going to be linked to this account here. So that's something to look at. Your $2 a month has Acorns Later included, which your Acorns Later is going to be your retirement account. Entirely up to you if you find this to be instantly viable. If you were someone who doesn't have your own retirement account besides this, it's something that you could look into for sure. I think everyone should have an IRA. Then our $3 one obviously has a little bit more in terms of Found Money, and a couple different more. It'll give you strategies, and obviously your FDI insured as well, so on any money lost in case the company goes down. But you can give out Acorns gift cards as well, which is another interesting feature too. So if you want to gift someone the ability to invest, you can go ahead and give them a gift card for a present too. So something you can think about. Final one I want to mention is probably my favorite right now, which is M1 Finance. M1 Finance is another free application, so that's something to think about. Free, F-R-E, that spells free, creditreport.com, baby. You got to think about free. Free makes everyone happy. Another benefit here. My favorite part of M1, there's several of them. It's also automated, so I think we're kind of going to a point where there's a lot of automated investing happening. So it's like your own personal, you're your own personal hedge fund manager, where you just let it go ahead and you put in what you want, and they will go ahead and take care of it. So your portfolios will be made up of any selection of stocks and ETFs. So they go ahead and offer you any stocks, any ETFs listed out there in the New York Stock Exchange, and you can pick from even international markets. And you could set what percentage out of 100 of your portfolio that you want it to take up. So if you want, let's say, 5% of your portfolio to go into Facebook, if you put in $100, they're going to invest $5 into Facebook for you. And they do offer fractional shares, which is why that works. So that's my favorite thing, the fact that it's automated investing. Their fractional shares are obviously exciting, and it's free. And they also can do automated investing too, so you tell them how much money you want to put into your account, and then they'll go ahead and put it in and then invest that day and purchase and sell shares in order to keep your balance proper. And you can edit that balance at any time. So if you think that you want now maybe to put 10% of your money into Facebook, you can just up that percentage and then rebalance your portfolio, and it'll sell other stocks and buy others in order to actually go ahead and make that actually your right 10%. So that's why I personally like M1. So I think it's something you should check out. I'll have links in the bottom for you to check out. So if you like this, go ahead and let me know, and check out my links in the bottom. I think everyone needs to start investing, and if you haven't yet, please do. Bye.